Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report from Monday, October 23rd, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. So where do we begin actually? I'm going to start with the big picture as usual and work my way into the day itself. Last week, let's go to the daily chart just to get the precision on this. That was a Wednesday settlement below the 248.61 channel bottom. Now, that was a Wednesday settlement, not by the full 1% margin. It was close, but it was not outside of the 1% zone, which I like to use for what I call, technical clarity, sell signal reliability. Now, it is a sell signal. It's just one that I'm reluctant to hesitant to act on until we violate it by 1%. So there's, mixed thoughts on this. I think personally, when you close below this formation, this longer term channel bottom on a daily chart, and it's close to that 1% mark as Wednesday settlement was, it's reason perhaps to exit a long position. Is it reason to enter a short position? Aggressive traders may do so. Others may not. And in fact, others may continue to hold on to a long position because there's, as I say, a case to be made for that. On the weekly chart, that 1% violation was, not violated, was not met on Wednesday settlement. Anyway, I don't want to digress too much, but I know some of you were caught long on this significant sell-off. And you had the earnings and Elon talking Thursday sent the market decidedly downward. And just the sell signal itself, just the technical sell signal, having closed the week below 248.78, I was saying 3 to 5 weeks, 200.75. And, by the end of the year, 186.97. That was roughly what I was saying. And now, given the fact that I think this week we are likely to test that 201.25 rising 2/3 speed line. On the daily chart, on the weekly chart, it comes in at 200.75. So that is the support that I'm using for the week. Now, as the week goes by and 201.25 rises into the 202, 203 handle, I will include it as a minor point. But they're so close to each other early in the week that I'm just focusing on 200.75. And it is an area, 201.25, 200.75, that can contain weekly selling pressures. And from there, we just might rally back, and we'll be watching for the buy signals on the way up. The descending 1/3 speed line coming down, so forth and so on, in terms of, whether the bounce off of 201.25 is one, if you're not buying it at 201.25, are you buying it on strength with a settlement above a trend defining line study? So we'll be on that, of course, on a day-to-day basis. But right now, it seems like new low down to 201.25, make that 200.75 today, where we may bottom out for the week itself. Now, it wasn't long ago, a couple of weeks ago, that I was mentioning this is a range of support. And depending on your trading style, if you're, a swing trader or a near-term investor, if you're 3 to 5 weeks out to 3 to 5 months, you may consider this to be a range from essentially 201.25 down to 190.07. On the weekly chart, it really rounds down to 200.75 down to 186.97. So this is a zone Or you could, especially if you're a day trader or a 3 to 5 day swing trader, sort of play them separately. 200, 201 and a quarter daily chart, able to contain weekly selling pressures. From here, I can see by what I see now, 224.20 attainable then within 3 to 5 days of bouncing or testing rather 201 and a quarter. But I'm still anticipating that 190.07 channel bottom in the weeks, possibly days ahead. Days ahead, if we settle today below not only 201 and a quarter, but also 200.75 on the weekly chart, then I think the 186.97 descending channel bottom is likely within a matter of just a few days. And that channel bottom on the daily chart is 190.07. So you can see that down here, 190.07 to 186.97. This area is narrowing every day. 186.97 is a static level for the week. 190.07 is dropping daily. This meaningful channel bottom, roughly, 4 months in the making, July, August, September. Yeah, roughly 4 months, 3+ months in the making, able to absorb selling on a monthly basis, which is a long time, for this stock. And so we may come off of here, rally back to what would then be channel resistance on the blue line. Nothing more than a trend line right now. But if we test this 190.07 formation, it would then allow for recovery back to the channel top, which, if settled above, would be a significant buy signal as we move through the rest of the year and into Q1. So I don't expect to see this upper blue line anytime soon. I'm just kind of painting the picture that 190.07 is a solid zone of support, not only for day traders and 3 to 5 day swing traders, but 3 to 5 week swing traders and 3 to 5 month near-term investors. Because off of here, within I don't know, about a month, it is possible we have precedent for that move within a month. So yes, possibly within a month. I'd say by the end of the year, we should then test this descending blue line, which is in the 260s right now. And this former channel bottom, by the way, at 248.61, which was the sell signal last week, below it, is also climbing into the 260s. So we'll just see how that all plays out on a day-by-day, week-by-week basis. If we do, though, close below not only 190.07, but on the weekly chart, 186.97, and yes, I'd like to see how that plays out on Friday. If that were to occur, present volatility does allow a settlement this week below 186.97. I say allow it only because of volatility. I still respect it as a solid area to buy into, whether you're covering a short position or actually going long. Both are valid. But if we do close below 186.97 at the end of this week, I'm expecting at least a retest of that 101.81 January low from earlier this year, and probably even more so. And I'll show that, chart that all out if it were to occur. But right now, this remains our zone of support, expected possibly this week, and able to contain selling through November and even perhaps the balance of the year with respect to the 190.07 channel bottom. So let's go to the day itself. I know most of you are interested in the day. Let's go with the, you can see this chart here. I'm thinking here which I want to show first, and I'm going to show this one first. All right, 218.86 is the high from Friday. And because it is the low, the lowest we've actually been since the July high, it does have pivot point qualities for the day. 218.86 able to contain intraday buying pressures, and if we push through it, the former channel top or bottom rather at 224.20 is likely today, where we can top out for the day, possibly into later week. 224.20 is a respectable former channel bottom, so it's well suited for day traders and perhaps 3 to 5 day swing traders who could set a short in this zone, and then the market can fall off from 224.20 down to our zone of targeted support that is at 201 and a quarter. This is it actually right here. This shows everything. So we could, if we push through 218.86, 224.20 in reach today, where we can tap out not only for the day, but perhaps into later week, and from here fall off again to 201 and a quarter within 3 to 5 days, potentially 190.07 by the end of next week. That is our down pivot point. We are below it, so selling pressures can continue building into later week below 224.20, which means I should probably show you the support for today. Actually, what I want to show is if we push through 224.20, I've got 231.42. So we're really not out of the woods in terms of an aggressive buy signal into later week unless we close above 231.42. So if you're short at 224.20 and we close above it, I'm not crazy about holding that short position. But in terms of actually going long into later week, I would rather wait for a settlement above 231.42. And if that were to occur, say today or tomorrow, Tuesday, then I see a 3 to 5 day rally back to the 248.78 channel bottom on the weekly chart, able to contain buying through November, and below which the 186.97 formation remains, a 3 to 5 week target, and we might see that within 3 to 5 days. Once again, if we were to close today, for instance, below 201 and a quarter, and just make that 200.75 because that is the weekly version. So that covers the upside pretty well. I already talked about 248.61, that channel bottom being longer term resistance, able to contain buying through November. And I also mentioned how, and I'm going to go back to that chart right. Where are you? I can't find it right now. Is this it? Yes, this is it. Okay. I was mentioning how if we test 190.07 this week, that this channel top becomes a significant form of resistance, and it will be converging with 248.61 anyway. So what I would like to say then is that if we were to retrace all the way back to 248.78, I don't see it this week once again, and I don't think it's even likely, but it becomes certainly possible if we close today, for instance, above 231.42, our upward pivot point into later week. And once again, 248.78 will be the beginning of a range, up to wherever we find these new channel structures coming down based on wherever the low might be. So you've got all that, and I'm not going to go into that just heavily right now. Let's talk downside. I'm going to finish up with the downside for today. I already mentioned how 218.86 is our intraday resistance. 207.79 is our intraday support. And that is nothing more than this, looks like an early April pullback high, a meaningful high. We rallied off of January, put out a February high, broke back. I think this was an early April high, and then we fell off. We didn't take this high out until late May when we continued higher. So it offers intraday support, and it can contain intraday weakness. And if we break 207.79, the targeted 201 and a quarter speed line is likely intraday. Once again, this line on the weekly chart is 200.75, and I'd rather you use that number because it's the weekly chart after all. If we close today below 200.75, then we set up tomorrow for this 190.07 descending channel bottom. That is the start of a range narrowing every day this week down to 186.97 that can absorb selling through the rest of the year. This is a profit-taking area if you're short. There's also a long entry, 186.97, if you are interested in buying Tesla on at least a 3 to 5 week basis or even longer. I think I've said everything. I'm hitting 12 minutes. I don't like going past 10 as it is. So please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow, of course, with Tuesday's Tesla. You have a great day.